Most people believe the best time to buy gold was 10 years ago. They look at the charts and think the window is already slammed shut. But what if the prices we see today are actually the floor for the next decade? Right now, the market is signaling something we haven't seen in our lifetime. Gold has recently shattered the $5,000 mark. Silver is making moves that haven't been witnessed in generations. You might think this is just another temporary spike. Honestly, the data suggests otherwise. Look at what the central banks are doing behind closed doors. They aren't selling their reserves to take a profit. They're accumulating more metal at a record-breaking pace. Why would they buy at all-time highs if a crash was coming? It's a question most retail investors aren't asking. We're told that the dollar is the only safe place to be. Yet, the very institutions that manage the dollar are trading it for gold. This isn't a coincidence. It's a fundamental shift in how the world defines wealth. Have you noticed how quiet the mainstream news is about silver's deficit? For 5 years straight, we've used more silver than we've pulled from the ground. The solar industry alone is swallowing up the available supply. AI hardware and green tech are creating a physical squeeze. This isn't paper trading or speculation. It's a matter of simple math. When demand exceeds supply for this long, something has to give. Some analysts are now projecting silver to hit triple digits. Gold is being forecasted at levels that seem impossible right now. $10,000 an ounce is no longer just a fringe theory. It's being discussed in serious financial circles. But why is this happening so fast in 2026? Geopolitical borders are shifting, and trust in fiat currency is eroding. The old rules of the global economy are being rewritten as we speak. Inflation isn't just a headline anymore, it's a permanent fixture. If you're waiting for prices to return to 2020 levels, you might be waiting forever. The correction everyone is hoping for already happened. It was a brief dip that was immediately bought up by big players. They know that physical metal is the only asset without a counterparty. If you don't hold it, you don't own it. That old saying is becoming more relevant every single day. Look at the gold to silver ratio. It's beginning to compress in a way that historically leads to massive silver rallies. Silver usually trails behind gold before it takes off like a rocket. We're seeing those first few sparks right now. Is it too late to get in? That depends on where you think the ceiling is. If the ceiling is 10 times higher than today, then this is the ground floor. Most people will wait until the prices are on the evening news every night. By then, the massive gains will have already been made. The smart money is moving now, while the public is still hesitant. They're watching the debt levels rise to 38 trillion. They're watching the interest on that debt become unpayable. And they're choosing the only exit ramp left. What happens when a government can no longer afford its own interest? They print more money to cover the gap. It's a cycle that has never ended well in history. Every new dollar printed dilutes the value of the one in your pocket. Gold and silver aren't just rising. The currency they're priced in is falling. It's a subtle difference, but a vital one to understand. Think about the purchasing power of an ounce of gold 50 years ago. It bought a high-quality suit then, and it buys a high-quality suit now. The metal stayed the same, but the paper lost its strength. Now, that process is accelerating at a rate we can't ignore. Have you checked the premium on physical coins lately? It's becoming harder to find actual bullion at the spot price. Dealers are struggling to keep stock on the shelves. This is what a supply-driven squeeze looks like in real time. Industrial silver demand is projected to rise another 20% this year. Where is that silver going to come from? The mines aren't producing it fast enough. It takes years to bring a new mine online. You can't just flip a switch and double production because prices went up. This creates a massive lag between demand and supply. That lag is exactly where the biggest price movements happen. We are entering that gap right now. Look at the BRICS nations and their new trade initiatives. They are openly discussing a gold-backed settlement system. They want to move away from a system they can't control. If half the world starts using gold to settle trade, what does that do to the price? The answer is simple. It sends it into a new stratosphere. The Western world is slowly waking up to this reality. Pension funds are starting to allocate small percentages to physical metals. Even a 1% shift in global retirement funds would overwhelm the market. There isn't enough physical gold in the world to accommodate that much cash. Silver is even more volatile because the market is so much smaller. A small amount of money moving into silver moves the needle significantly. It's like trying to fit the contents of a swimming pool through a garden hose. Pressure builds until the system breaks. Are you prepared for what happens after that break? Most people assume the banks will always be liquid. They assume they can always trade their digital numbers for physical goods. But history shows that during a crisis, the physical assets disappear first. You can't print silver in a basement. You can't manufacture gold out of thin air. That's why they've been the ultimate forms of money for 5,000 years. It isn't about being a gold bug or a doomsday theorist. It's about looking at the balance sheet of the world. The numbers don't add up anymore. When the math fails, people return to what is real. Right now, gold and silver are the most real things you can own. The window to buy at these levels is closing faster than people realize. Don't let the daily fluctuations distract you from the bigger picture. The trend line is clear, and it's pointing straight up. What if the paper price you see on your phone isn't the real price? For decades, the futures market has controlled the cost of metals. Banks trade massive amounts of gold that doesn't actually exist in their vaults. They call it paper gold, and it's used to keep prices suppressed. But a major shift is occurring in the physical delivery market. Investors are no longer settling for cash. They want the actual bars. When everyone asks for their metal at once, the paper system collapses. We are seeing the first cracks in that exchange system today. If the exchange runs out of physical metal, the price discovery resets. Suddenly, the market has to find a price where people are willing to sell. That price is likely much higher than the current spot rate. Look at the premiums people are paying in Eastern markets right now. In Shanghai, gold is often trading significantly higher than in London or New York. The physical metal is flowing from the west to the east at an incredible speed. Once that gold moves to Asia, it rarely comes back. It goes into private vaults and central bank basements. It's being removed from the global supply permanently. Does that sound like a market that is about to get cheaper? Honestly, the scarcity is becoming the primary driver of the price. Silver's in an even tighter spot because it's an industrial necessity. You can't build a modern smartphone or an electric vehicle without it. Manufacturers are starting to worry about their future supply chains. Some are even looking into buying stakes in silver mines directly. They need to guarantee they have the raw materials to stay in business. This is a brand new source of demand that didn't exist 20 years ago. It's a perfect storm. For anyone holding physical bullion, you have the monetary demand on one side and industrial demand on the other. Both are fighting over a shrinking pool of available metal. Meanwhile, the cost of mining is skyrocketing. Energy, labor, and equipment are all more expensive than ever. A miner can't afford to dig if the price of the metal is too low. This creates a natural floor for how low gold and silver can go. If the price drops too far, the mines simply stop working. Then the supply dries up completely, and the price bounces back even harder. We are currently sitting just above that production cost floor. This makes the current levels one of the lowest risk entries in years. It's not about timing the exact bottom of a daily chart. It's about recognizing a generational buying opportunity. How many times in history has the world seen this much debt? How many times has the global reserve currency been under this much pressure? The patterns are repeating, and the outcome is usually the same. Wealth isn't destroyed, it's simply transferred. It moves from paper assets into hard assets. Gold and silver are the primary beneficiaries of that transfer. You can see it happening in the bond market right now. Investors are fleeing safe government debt because the returns are negative. After you account for inflation, you're losing money every year. Gold, even with no interest rate, is a better deal than a losing bond. People are waking up to this reality in massive numbers. The transition is just beginning. Have you ever wondered why retail stores are suddenly selling gold bars? It's not just a marketing gimmick for big box retailers. They've noticed the massive demand from everyday people who are scared. When the general public starts buying gold at the grocery store, something has shifted. The fear of being left behind is starting to outweigh the fear of a price drop. In the past, gold was seen as an investment for the ultra-wealthy. Now it's becoming a survival tool for the middle class. People are looking at their savings and realizing the numbers are stagnant. The cost of living is rising faster than any interest rate a bank offers. Silver is the poor man's gold, but that title is becoming a bit misleading. The upside potential for silver actually dwarfs gold in many scenarios. Historically, the silver price moves like a coiled spring. It stays flat for years while gold climbs, and then it explodes overnight. We call this the catch-up phase. If silver were to return to its historical ratio with gold, it would be over $100. Right now, it's trading at a fraction of that value. That's a huge gap that the market will eventually have to close. Look at the mining reports from the last fiscal quarter. Yields are dropping because the easy-to-reach metal is already gone. Miners have to dig deeper and process more rock to get the same amount of gold. This increases the all-in sustaining cost for every single ounce. Basically, the earth is making us work harder for our money. This physical reality is something a computer algorithm can't change. Wall Street can trade paper contracts all day, but they can't print more ore. Eventually, the physical reality of the earth wins over the digital reality of the market. Are you watching the volatility in the banking sector lately? Every few months, another regional bank seems to be on the edge of a cliff. The government steps in with a temporary fix that involves more debt. Each fix is just a bandage on a much larger wound. Gold is the only asset that doesn't rely on someone else's promise to pay. If a bank fails, the gold in your hand doesn't care. It still has the same weight and the same purity. That's the definition of a safe haven. You don't buy it to get rich quick, you buy it to stay rich forever. But in the current environment, staying rich might lead to incredible gains. When the masses panic, they all rush for the same small exit. That exit is the precious metals market. Imagine millions of people trying to buy gold at the same time. The price wouldn't just rise, it would gap up by hundreds of dollars. We've seen it happen in other countries experiencing currency crises. The local price of gold hits a new record every single day. It's a slow-motion collapse that eventually picks up speed. Many believe the United States is immune to this process, but the laws of economics don't care about borders or history. Debt is debt, and inflation is inflation. The signals are flashing red across the entire financial spectrum. Gold is simply the thermometer telling us the fever is rising. Silver is the insurance policy for a system that's overheating. How much longer can the heat stay this high before something melts? The smart move is to be prepared before the smoke starts to clear. What if the dollar isn't the global standard by the end of this decade? It sounds extreme, but the groundwork is being laid today. Nations are already settling oil contracts in currencies other than the dollar. This creates a massive surplus of dollars that are no longer needed globally. Those dollars eventually come home, bringing massive inflation with them. When that flood hits, the price of hard assets will skyrocket. Gold will be the primary destination for that returning capital. It's the only asset that can absorb that much liquidity without losing value. Look at how the average person reacts to gold prices. They usually buy when it's at an all-time high because of the hype. Then they sell in a panic when the price dips 5%. This is the retail trap that keeps most people from building real wealth. The professional investors do the exact opposite. They accumulate during the boring periods when the price is sideways. They view the dips as a discount on a limited resource. Right now, silver is in one of those boring consolidation phases. It feels like it's doing nothing while everything else is moving. But historically, this is the calm before the storm. When silver breaks out of a long-term range, the move is violent. It doesn't move in a straight line. It jumps in massive increments. You can wake up and find the price is up 10% in a single session. By the time you decide to buy, the best entry point is long gone. Honestly, the physical market is already showing signs of stress. Wholesale premiums are starting to creep up again. This usually happens before the spot price reflects the actual demand. It's an early warning system for those who know what to look for. Have you considered the role of central bank digital currencies? As governments move towards CBDCs, they want more control over your spending. Gold and silver represent the only way to hold wealth outside that digital net. They are private, anonymous, and independent of any computer server. In a world of total digital surveillance, physical metal is the ultimate freedom. That realization is driving a whole new demographic into the market. It's not just about the economy anymore, it's about sovereignty. People want to know that their hard-earned labor can't be deleted. Think about the silver used in every single smartphone on the planet. It's such a small amount per device that it's not worth recycling. This means millions of ounces of silver are thrown into landfills every year. Unlike gold, silver is being consumed and lost forever. The world's above-ground stockpiles of silver are actually shrinking. Gold is hoarded, but silver is used up. This creates a long-term supply crunch that is mathematically inevitable. We are approaching the tipping point where industrial demand exceeds mine output. When that day comes, the price will have to adjust to destroy demand. That means the price goes high enough that companies stop using it. But for many high-tech applications, there's no substitute for silver. They will pay whatever price they have to in order to keep their factories running. That is the definition of inelastic demand. It's a dream scenario for anyone holding the physical metal. Are you positioned to benefit from that shift, or will you be a spectator? The next few years will likely define the financial future for a generation. Most investors are distracted by the shiny new tech stocks. They see 20% gains in a month and think the party will never end. But those stocks are valued based on future earnings in a currency that is losing value. If you adjust the stock market for inflation, the gains look much smaller. Gold, on the other hand, doesn't have an earnings report or a CEO. It doesn't need to innovate to be valuable. Its value is intrinsic and has been recognized for millennia. Have you ever wondered why every major culture on Earth independently chose gold as money? It's because it meets the physical requirements of perfect money. It's divisible, portable, durable, and most importantly, scarce. Silver shares these properties, but adds the layer of industrial utility. This dual nature makes silver a unique beast in the investing world. Sometimes it acts like a currency, and sometimes it acts like a raw material. Right now, it's beginning to act like both at the same time. The green energy transition is essentially a massive bet on silver. Every solar panel requires about 20 grams of the white metal. The new generation of high-efficiency cells requires even more. Even if we stop using silver in jewelry, the industrial demand is relentless. We are currently in a global silver deficit that shows no signs of closing. The world is literally eating its seed corn when it comes to silver reserves. What happens when the cupboard is finally bare? The price won't just move up, it will reset to a new reality. Look at the way institutional buyers are behaving. They aren't buying paper contracts on the COMEX anymore. They are taking delivery and moving the metal to private vaults. This draining of the exchanges is a signal that the big players are nervous. They know that in a real crisis, a paper contract is just a piece of trash. Only the physical bars will matter when the music stops. Honestly, the timeline for this move is shorter than most people think. We've spent 40 years in a cycle of falling interest rates. That cycle has officially reversed. Rising rates are usually bad for gold, but only if the real rate is positive. If inflation is at 8% and the bank pays 5%, you're still losing. Gold thrives in an environment where people realize they are losing money in the bank. We have reached that realization point. You can see it in the gold sales numbers in Europe and Asia. Ordinary people are pulling their cash out of savings and buying coins. They've seen how fast a stable currency can lose its edge. The psychological shift is often more powerful than the economic one. Once people lose faith in the paper, they never truly trust it again. Are you waiting for a sign to protect your own savings? By the time the sign is obvious to everyone, the price will be out of reach. Think about the last time you saw a significant price drop in gold. It didn't stay down for long, did it? The buyers were waiting in the wings to scoop up the cheap metal. Every dip is being aggressively bought by sovereign wealth funds. They are building a foundation for a new global financial architecture. You have the choice to build your own foundation alongside them. It's about moving out of the way of a crashing wave. The wave is the massive amount of global debt looking for a home. What if the real reason for the price surge isn't what they're telling us? The media blames high prices on temporary supply chain issues, but the truth is deeper than a simple shipping delay. We are witnessing the slow death of the credit-based system. For decades, we've lived on the promise of future growth. Now the world is realizing that growth can't keep up with the interest. Gold is the only asset that thrives when the growth story fails. It's the ultimate no-confidence vote in the global leadership. Look at the mining stocks compared to the price of the metal. They are trading at some of the lowest valuations in history. The market is currently pricing in a total collapse of the mining industry. This is a massive disconnect that can't last forever. When the miners finally catch up to the metal price, it will be a frenzy. Silver is currently the most undervalued asset on the planet. Relative to the amount of money in the system, silver is cheaper than it was in 1970. Does that make sense in a world that is obsessed with technology? The digital revolution is built on a physical foundation of silver. Every circuit board and every sensor requires its conductivity. Without it, the modern world simply stops working. Honestly, the current price is a gift to those who are paying attention, but most people are too busy chasing the latest meme coin or tech trend. They don't realize that the old money is the only thing that lasts. Have you ever tried to use a digital wallet when the power's out? Or when the banking network is undergoing a planned maintenance? Physical metal doesn't require a login or a password. It is the most decentralized asset in existence. It's the only thing you can truly own without a middleman. The elites have always known this, which is why they keep it in their portfolios. They tell the public that gold is a pet rock, while they accumulate tons of it. It's a classic case of do as I do, not as I say. Watch the actions of the world's most successful investors. They aren't betting on the dollar, they are hedging against it. The gold to S&P 500 ratio is starting to turn in favor of gold. This usually marks the beginning of a multi-year bull market in commodities. We are currently in the first inning of that game. Think about the psychological impact of gold hitting $6,000. Suddenly, everyone who ignored it will want a piece of the action. The FOMO, fear of missing out, will drive the price into a vertical climb. That's when the smart money starts to look for the exit. But we are nowhere near that point yet. Most people still don't own a single gram of physical metal. They think it's too difficult to buy or store. In reality, it's never been easier to secure your future. The friction is mostly in the mind, not the marketplace. Are you going to wait until the lines at the coin shop are around the block? By then, the premiums will be 50% over the spot price. You'll be paying a massive tax for your hesitation. The best time to build a position is when nobody's talking about it. The second best time is right now, before the next leg up. The numbers are telling a story that most people aren't ready to hear, but once you hear it, you can't unsee the truth. What happens when the central banks stop being the lenders of last resort? They've spent years propping up the bond market with digital money. But eventually, the market demands a real return on its investment. We are seeing a global revolt against paper debt. Investors are looking for an exit, and the door is remarkably small. Gold is that door, and it's starting to get crowded. Have you ever looked at the total value of all the gold in the world? Compared to the total value of all stocks and bonds, it's tiny. It's like a single drop of water in an Olympic-sized swimming pool. If even a small fraction of that paper wealth tries to move into gold, the price must react. The physical supply simply cannot accommodate a mass exodus from the dollar. Silver is in an even tighter position because its market is a fraction of gold's. A few $billion moving into silver would send it to the moon. We aren't talking about theoretical moves. We're talking about basic physics. Too much money chasing too little metal always leads to a price explosion. Honestly, the current prices for silver are a historical anomaly. It is one of the few things in the world that is cheaper today than it was in 1980. Think about that for a second. Everything else, bread, gas, housing, has gone up 5 or 10 times. Yet silver has been suppressed and held back for decades. This creates a massive amount of pent-up energy in the market. When the lid finally blows off, the move will be historic. Look at the way the BRICS nations are expanding their membership. They are building a parallel economy that doesn't rely on Western banks. Gold is the glue that holds that new system together. It's the only neutral reserve asset that everyone can agree on. They don't have to trust each other if they trust the gold in the vault. This is a return to sound money on a global scale. The West has forgotten what sound money feels like. We've been living on credit and trust for so long we think it's normal. But the rest of the world is reminding us that trust is earned, not printed. Are you watching the depletion of the COMEX and London vaults? Every month, millions of ounces of metal are being withdrawn. The eligible gold is being moved to registered, and then it disappears. It's being shipped to refineries to be turned into kilobars for the Asian market. Once it's in that form, it's gone from the Western financial system. The drain is real, and it's accelerating. Many people think they can just buy a gold ETF and be safe. But those ETFs are often just more paper promises. In a real squeeze, you might find that your gold is just a cash settlement, and that cash will buy much less metal than you expected. There is no substitute for holding the physical bars and coins. It's the only way to be sure you're actually part of the new system. How much of your wealth is currently tied up in promises to pay? How much of it is actually in your physical possession? The answer to those questions will determine your future. Gold and silver are the ultimate forms of financial insurance. You hope you never need them, but you're glad you have them when you do. The time to buy insurance is before the fire starts, not during it. The smoke is already visible on the horizon. What if the all-time high is actually a massive undervaluation? We tend to look at nominal prices rather than real value. A $5,000 gold price sounds shocking to the uninitiated, but if you adjust for the amount of currency in circulation, it's actually cheap. The dollar has lost over 90% of its value since 1913. Gold hasn't gotten more expensive. The paper has just become worthless. Have you ever looked at the debt-to-GDP ratio of the major powers? It's reaching levels that have historically led to currency resets. In every reset, the price of gold is used to rebalance the books. This usually involves a massive overnight revaluation of the metal. Imagine waking up and seeing gold at $10,000 or $15,000. It sounds like science fiction until it actually happens. Central banks keep this possibility a secret to prevent a public panic. They want to accumulate as much as possible before the reset occurs. Silver will likely benefit even more from this scenario. Because it's a smaller market, the overshoot on the price will be extreme. We call this a short squeeze on a global physical level. Look at the way silver is traded on the futures markets today. There are hundreds of paper ounces for every one physical ounce in the vault. If those paper holders all demanded their metal, the system would freeze. This is the black swan event that keeps bullion bankers awake at night. They are playing a game of musical chairs with physical metal. Right now, the music is slowing down, and there are very few chairs left. Honestly, the risk of not owning metal is now higher than the risk of owning it. If the price goes down, you still have the physical silver. If the paper system goes down, your digital wealth could vanish. It's a lopsided bet where the upside is infinite and the downside is protected. Think about the cost of a single ounce of silver compared to a tank of gas. In many places, they are almost equal in price right now. Which one do you think will be more valuable 10 years from now? The gas will be burned and gone, but the silver will still be here. It's the ultimate way to store the energy of your labor. Have you noticed how much more difficult it is to buy silver in bulk? Large orders are starting to see delivery delays of several weeks. This is a sign that the retail supply chain is beginning to snap. When the big money enters the retail space, the shelves clear out instantly. We saw a glimpse of this during the 2020 lockdowns. Back then, you couldn't find a silver eagle for less than double the spot price. The next shortage will likely be much more permanent. Miners are struggling with declining ore grades and rising regulations. It's becoming politically incorrect to open new mines in many countries. This artificial restriction on supply is a huge tailwind for prices. The world wants more silver for its green future, but won't let miners dig. You don't need to be an economist to see how that ends. Price is the only mechanism left to balance the scale, and that price has a long, long way to go to reach equilibrium. Are you going to wait for the government to tell you to buy? By then, the opportunity will have passed you by. The signals are clear for anyone with eyes to see. Have you ever wondered why silver is called the metal of the moon? In ancient times, it was valued almost as highly as gold. The gap between the two metals has never been this wide for this long. Historically, the ratio has hovered around 15-1. Today, it's sitting closer to 80 or 90-1. This means silver is historically on sale compared to gold. If the ratio simply returns to its average, silver prices would triple, and that's without gold moving up a single cent. But we know gold isn't going to stay still. As gold climbs, it pulls silver along behind it on a chain. Once that chain snaps, silver usually catapults past the leader. It's a pattern that has repeated in every major bull market. Look at the way industrial tech is evolving right now. We are moving toward a world of total electrification. Every electric motor, every switch, and every relay needs silver. It is the most conductive element known to man. You can't substitute it with copper or aluminum without losing efficiency. In a world starving for energy, efficiency is everything. This makes silver a strategic resource, not just a luxury. Honestly, the military uses for silver are also massive and often overlooked. It's in the guidance systems of every missile and the batteries of every sub. In a time of rising global tension, these stocks are being drained. Governments are prioritizing defense over the open market. What happens to the price when the private sector has to compete with the military? The price becomes a secondary concern to the necessity of the material. We are approaching a period of scarcity pricing. This is when the price is no longer determined by mining costs. Instead, it's determined by the desperation of the buyer. Have you checked the debt clock in the last few minutes? The numbers are spinning so fast they're almost a blur. Every tick represents more pressure on the value of your savings. Gold is the only way to short this runaway debt. It is a bet against the competence of the people running the system. Given the track record of the last decade, that's a very safe bet. Most people are looking for the next big thing in the crypto market, but they're ignoring the original big thing that has never failed. Gold has outlasted every empire, every war, and every currency. It doesn't need a high-speed internet connection to exist. It doesn't need a marketing team to convince you of its value. Its weight in your hand is all the proof you need. Are you watching the way people are starting to barter in some regions? When the local currency fails, they turn to silver coins and gold grams. It becomes the medium of exchange when trust in paper is gone. We aren't there yet in the West, but the trend is moving that way. The prepper community was once seen as a fringe group. Now, their ideas are being discussed at dinner tables across the country. People are realizing that just-in-time delivery applies to money too. If the system glitches, do you have a just-in-case fund? Physical metal is the ultimate liquidity when the ATMs go dark. It's better to be 10 years too early than 1 minute too late. The window is still open, but the frame is starting to creak. What if the banks are actually rooting for a price drop? A lower price allows them to close out their massive short positions. They've spent years betting against gold to keep the illusion of a strong dollar. But they can't hold back the tide of physical demand forever. Every time they suppress the price, it just creates a better buying opportunity. Look at the volume of metal being moved out of the Swiss refineries. They are working 24 hours a day to meet the demand from the East. They are melting down large bars into smaller ones for individual investors. This is a sign that the little guy is finally entering the fight. When the masses move, the markets break. Honestly, we've never seen a global awakening like this before. In the past, a currency crisis was usually limited to one country at a time. Now, the entire fiat system is shaking at its foundation. Have you noticed how many countries are trying to repatriate their gold? They want their physical bars back from the vaults in New York and London. They don't want a digital receipt. They want the actual metal on their soil. If the governments don't trust each other, why should you trust the system? This lack of trust is the primary fuel for the next leg of the bull market. Silver is often called the devil's metal because of its wild price swings. It can be frustrating to hold while the rest of the market is booming. But those who have the patience to wait are usually rewarded handsomely. Think about the silver to gold ratio once again. When it finally reverts to the mean, the wealth transfer will be staggering. It's like buying gold at a 70% discount. Why would anyone pass up that kind of mathematical advantage? The answer is usually a lack of education and a surplus of distraction. People are taught to buy stocks and bonds, not relics from the past. But those relics are the only things that haven't been devalued by a printing press. Look at the cost of living compared to 20 years ago. A gallon of milk or a loaf of bread hasn't changed, but the money has. It takes more units of currency to buy the same physical goods. This is the hidden tax that most people don't understand. Gold and silver allow you to opt out of that tax. They preserve your purchasing power across time and space. Are you concerned about the digital trail of your every transaction? Every swipe of your credit card is logged and analyzed. Physical metal is one of the last ways to maintain true financial privacy. It's not about doing anything wrong. It's about the right to be left alone. In an age of total transparency, privacy becomes a luxury. And that luxury is being priced into the value of gold and silver. Think about the sheer amount of energy it takes to mine an ounce of gold. You have to move tons of earth and use massive amounts of diesel and electricity. The price of gold is essentially crystallized energy. As the cost of energy goes up, the cost of gold must follow. It's a direct link that cannot be broken by a central bank. They can print money, but they can't print energy. And they certainly can't print the gold that energy produces. The floor is rising and the ceiling is disappearing. Where will you be when the world finally realizes what is happening? What if the paper market for gold finally defaults? The COMEX is essentially a giant ledger of promises. For every physical ounce, there are hundreds of digital claims. If even 5% of those people demand their metal, the game ends. The exchange would have to settle in cash, proving the metal isn't there. This is the moment the spot price becomes irrelevant. The real price would be whatever a person with a bar in their hand demands. Honestly, we are closer to that reality than the headlines suggest. Look at the rising frequency of force majeure clauses in financial contracts. They are preparing for a world where they can't fulfill their obligations. Have you thought about the role of silver in the AI revolution? Artificial intelligence requires massive data centers and high-speed processors. Silver is used in the specialized soldering and connections of these chips. As the demand for computing power grows, the demand for silver follows. This isn't just a green play, it's a tech play. The world is being rebuilt on a foundation of silver and silicon. And one of those is abundant, and the other is becoming increasingly rare. Mining experts are warning that we have reached peak silver. This means we are pulling less metal out of the ground every year. The easy deposits were found a century ago. Now we're processing tailings and low-grade dirt just to stay afloat. This is why the price has to move higher to incentivize new exploration. If the price stays low, the supply will simply vanish. Think about the global debt as a giant mountain of dry wood. Inflation is the spark that has already landed on that mountain. Gold and silver are the only fireproof shelters available to the average person. Most people will wait until they see the flames before they move. But by then, the price of the shelter will be astronomical. Why wait for the crisis to be official before taking action? The markets are already telling you everything you need to know. Look at the way premiums on small gold bars are behaving. They are staying high even when the spot price dips. This tells you that the physical demand is disconnected from the paper price. The street price is what actually matters for your wealth. Are you watching the transition to a multipolar world? The era of a single dominant currency is coming to a close. In a world with no clear leader, people return to the neutral standard. Gold has no nationality and owes no allegiance to any government. It is the ultimate stateless money. That's why it's the perfect asset for a world in transition. Silver will likely follow the same path, but with more speed. Because it is so ignored, the snapback will be much more dramatic. Have you ever seen a spring that has been compressed for 40 years? The amount of energy stored in the silver market is terrifying. When it finally releases, it won't just be a bull market. It will be a complete revaluation of what money is. Don't be fooled by the quiet days on the price chart. The tectonic plates of the financial world are shifting beneath our feet. The time to find solid ground is now. What if the real shortage isn't in the ground, but in the vaults? We are seeing a massive migration of physical metal from west to east. The London and New York exchanges are being drained of their lifeblood. Once that gold reaches the hands of Eastern buyers, it stays there. They don't trade it back and forth like a digital stock. They hold it as a multi-generational store of value. This creates a permanent vacuum in the Western supply chain. Have you noticed how many out-of-stock signs are appearing online? Standard 1-ounce silver coins are becoming harder to source in bulk. The wait times for delivery are stretching from days to months. Honestly, this is the first stage of a systemic supply failure. When the supply chain breaks, the price becomes secondary to availability. Look at the way the big banks are suddenly changing their price targets. They spent years telling you gold was a dead asset. Now they're racing to raise their forecasts to $6,000 or $7,000. They are finally admitting what the data has been saying for years. But they won't tell you to buy until they've finished their own accumulation. Think about the silver used in the Internet of Things. Every smart device and connected appliance uses a tiny amount of silver. Because the amount is so small, it's never recovered or recycled. We are literally throwing our monetary future into the trash every day. This creates a sink that permanently removes silver from the world. Gold is recycled, silver is consumed. That's the most important fundamental difference between the two. One is a hoard, and the other is a dwindling resource. Why would anyone bet against a metal that the world is running out of? The math of the silver market is a ticking time bomb. Are you watching the interest rates on government bonds? They are no longer keeping up with the real world cost of living. The real rate of return is deeply negative for most savers. In this environment, holding cash is a guaranteed way to lose wealth. Gold doesn't pay a dividend, but it also doesn't lose 10% of its value annually. In a race to the bottom, the one who stays still is the winner. That's exactly what gold does. It stays still while the world devalues. Look at the way the BRICS currency project is accelerating. They are openly talking about using a basket of commodities to back their trade. Gold is the anchor of that basket because it can't be manipulated. If this plan succeeds, the demand for gold will reach a fever pitch. Every nation will need a massive reserve just to participate in global trade. The current price doesn't reflect this looming demand at all. It's still being priced as if we live in the unipolar world of the 1990s. But that world is gone, and it's never coming back. We are moving into an era of hard assets and hard truths. The hardest truth is that the paper promises are failing. Have you ever seen a central bank fail to meet its obligations? It usually starts with a temporary restriction on withdrawals. Then it ends with a total devaluation of the currency. Gold and silver are the only assets that allow you to bypass that failure. They are your personal, off-grid financial system. The time to set it up is while the lights are still on. What if the volatility we see today is actually the market trying to find the real price? For years, the price of gold has been kept in a narrow band, but the pressure of global debt is finally breaking those artificial barriers. Think about the billions of people in India and China who view gold as the only true money. As their middle class grows, their demand for physical metal grows with them. They don't trust banks, and they certainly don't trust paper. They buy gold jewelry and bars as a standard part of their savings plan. This cultural demand creates a massive floor that Western traders often ignore. Westerners tend to view gold as a speculative trade or a fear index. The East views it as the foundation of a family's financial security. Which perspective do you think is more grounded in reality? Honestly, the West is finally starting to catch up to this ancient wisdom. Look at the rise of gold-backed debit cards and digital gold apps. People want the convenience of the digital age with the security of the Bronze Age. But even these digital solutions rely on physical metal in a vault somewhere. If that vault is empty, the app is just a collection of pixels. This is why physical possession remains the gold standard of investing. Have you ever looked at the silver to gold mining ratio? We pull about 8 ounces of silver out of the ground for every 1 ounce of gold. Yet the price ratio is nearly 80 to 1. This disconnect is one of the greatest anomalies in the financial world. Either gold is wildly overpriced or silver is drastically cheap. Given the debt levels, it's almost certainly the latter. Silver is being priced as a waste product of copper and zinc mining. But as demand for high-tech electronics grows, it's becoming the most important product. Manufacturers are beginning to hoard physical silver to protect their production lines. They can't afford to let a lack of silver shut down a multi-billion-dollar factory. This just-in-case hoarding is a new and powerful driver for the price. Are you positioned to benefit when the industrial squeeze meets the monetary panic? The two forces are converging like two weather fronts, creating a superstorm. Most people are completely unprepared for the velocity of the coming move. They think that they'll have time to react once the price starts to move. But in the precious metals market, the biggest gains often happen in a matter of days. By the time you see the breaking news alert, the gap has already been filled. Think about the last time you tried to buy something during a shortage. The price didn't just go up. The item simply wasn't available at any price. That is the ultimate risk in the silver market. It's not that the price goes too high, it's that the physical metal disappears. The exchanges can settle in cash, but you can't build a solar panel with cash. You can't protect your wealth with a cash settlement that's losing value by the hour. Look at the history of the Hunt brothers in the 1970s. They tried to corner the silver market and almost succeeded. Today, the buyers aren't just two wealthy brothers. The buyers are sovereign nations, multinational corporations, and millions of individuals. The scale of the current demand makes the 1970s look like a dress rehearsal. The stage is set for a performance that will change the financial landscape forever. Are you going to be in the audience, or will you be part of the story? The decisions you make today will echo for years to come. Don't let the noise of the daily news distract you from the signal. The signal is clear. Hard assets are the only way forward. What if the recent $600 price drop was actually a massive gift to investors? The headlines are calling it a crash, but the context tells a different story. Gold just touched $500-600 before this violent intraday reversal. Even after the dip, the metal is still trading at levels we only dreamed of a year ago. It's a classic shakeout designed to scare the weak hands out of the market. While retail investors panic, central banks are likely using the dip to fill their vaults. Silver recently tagged $120 before experiencing its own double-digit pullback. Does a one-day drop change the fact that we are in a massive physical deficit? The industrial demand from AI and solar hasn't disappeared because of a price chart. If anything, the lower price makes the supply squeeze even tighter. Look at the way gold is being viewed in the early months of 2026. It's no longer just a hedge. It's becoming the primary driver of portfolio performance. Major banks like Deutsche Bank are already raising their targets to $6,000. Some AI models are even projecting a move toward $10,000 by the spring. These aren't just random guesses. They're based on the total breakdown of trust in fiat. Have you noticed how the Greenland issue and trade wars are fueling the fire? The rules of the global economy are being rewritten in real time. When geopolitical borders shift, capital always flows toward the safest harbor. Right now, that harbor is clearly made of gold and silver. Honestly, the volatility is just a sign that we've entered the parabolic phase. In this stage, the moves are bigger, faster, and much more emotional. You have to look past the daily noise to see the structural trend. The trend is a one-way street toward the revaluation of hard assets. Even with the recent pullback, silver is still up nearly 60% this year, Compare that to any other asset class in your portfolio. Nothing else comes close to the performance of the metals of the moon and sun. Are you watching the way the US dollar index is behaving? It's slipping to multi-year lows despite the uncertainty in other regions. People are trading their paper for something they can actually hold. Think about the $51 billion that flowed into gold funds just last year. That trend is accelerating, with billions more entering in just the first few weeks of January. The smart money isn't selling. They're just waiting for the next breakout. Support for gold is holding firm near the $4,900 to $5,200 range. As long as that floor stays intact, the path of least resistance is up. For silver, $100 is the new psychological battleground. If we consolidate here, the next leg could take us straight to $150. Citi has already lifted their short-term target to that very level. This isn't a market for the faint of heart, but it is a market for the prepared. How many more signals do you need before you realize the game has changed? The era of cheap gold and silver is officially a part of history. We are now living in the eras of the great commodity reset. Every dip is a chance to secure your place before the next vertical climb. By the time the $10,000 target is hit, the entrance will be closed to the public. The physical supply simply won't be there for everyone who wants it. Don't let a temporary reversal blind you to a generational opportunity. The math hasn't changed and the debt hasn't gone away. The fever is still rising and the thermometer is just taking a breath. Are you going to be the one who bought the dip or the one who watched it pass? The window is still open, but the sun is starting to set on these prices. What if we're not just in a bull market, but a total repricing of reality? As of late January 2026, the old price charts have been rendered obsolete. Gold recently shattered the $5,500 barrier, a level that was once considered a wild forecast. Silver has followed suit, clearing 119 and targeting the psychological triple-digit floor as its new base. The repricing of trust is no longer a theory. It is the dominant market force. Investors are looking at a US dollar index that has shed nearly 11% in the last year. When the world's reserve currency slips, gold doesn't just rise, it recalibrates. Have you looked at the central bank gold to treasury ratio lately? For the first time in decades, gold accounts for a larger share of global reserves than US debt. This is a silent, systemic vote of no confidence in the paper-based order. The debasement trade is now the consensus play for institutional giants. JP Morgan and Deutsche Bank are now openly discussing gold targets of over 6,000 to 8,000 per hour. Even at these heights, the math of private allocation suggests we are still early. If global household allocation to gold moves from 3% to just 4.6% to rise, the demand would be unmeetable. The physical supply of silver is in an even tighter vice. We are entering the past fifth consecutive year of a global silver deficit. Industrial demand from AI data centers, solar grids, and EVs is consuming over 60% of total supply. Miners are only producing about 130 million ounces annually, while demand pushes toward biomarmors to 1.1 billion. This isn't my squeeze that can be fixed by a higher price in the short term. It takes years to develop a primary silver mine, and most silver is just a byproduct of other metals. You can't just turn up silver production because the price hit on per 120 an hour. This supply rigidity is the secret sauce for the next leg of the rally. Are you watching the way the gold to silver ratio is collapsing? It crashed from over 100.1 Omendaris in 2025 to nearly 46.1 today. Historically, silver has always been the high beta version of gold. When gold runs, silver eventually sprints to catch up and then overtakes it. If the ratio returns to its historical sound money average of 15, where does that put silver? The numbers suggest a reality that most people aren't mentally prepared to accept. The current volatility is simply the system's way of shaking off those who don't understand the fundamentals. Don't be distracted by a $100 dip when the destination is a new stratosphere. The era of never normal is here, characterized by geopolitical shifts and resource nationalism. From the trade disputes in Greenland to the tensions in the Middle East, every headline is a catalyst. Gold and silver are the only assets that don't require an internet connection or a government permission. They are the ultimate off-grid wealth protection in a digital, surveilled world. The window to buy cheap metal is firmly in the rearview mirror, but the window to buy any physical metal is still cracked open. For now, are you going to be the one who hesitated at $5,000 or the one who secured their future? The trend is clear, the math is certain, and the time is now.